This is my P&L screenshot from this morning. Because of the current market conditions, we're not in a bullish market. Trading volume is relatively low, and the probability of having an A+ setup in this market is lower. So all these 4 trades that I took this morning were scalp trades. I was intentionally aiming to lock in smaller profits and try not to stay in my trades like I would if it was an ideal market environment. If you're in the Friendly Bear University, you know how these are just my relatively small wins compared to other trades that I've shared with the FBU student. In this tutorial, I want to share how I scalp trade when the market is not as volatile. Every year, we have some months where the market is extremely active and volatile, giving traders multiple high percentage gappers in a day. That's the ideal trader's market, with lots of A+ setups for you and I to trade more aggressively. But the reality is, the majority of the time in the year, the stock market is relatively slow, just like right now. So I'm going to share step by step. Number 1, how I choose my stocks during a slower market. 2, how I set my key levels for scalping entries. 3, how I lock in profits in short-term price movements. 4, and most importantly, my risk management strategy for scalping. If you're ready to learn, give this tutorial a free like and make sure you ask me any questions about this tutorial down below. How I choose my stocks during a slower market. The first thing I do in the morning is to research the stocks that fit my criteria. For example, this ticker NWTG was on my scanner because it fit my preliminary scanning criteria. NWTG had a pre-market volume of about 15 to 20 million. It was a 60% gainer. So my due diligence was to fact check the float and institutional ownership of this stock. These are 2 crucial statistics that I need in my stock selection criteria. To keep my research process efficient and accurate, I use Ask Edgar and Flash Research. On Ask Edgar, I can look up this stock NWTG and it will quickly tell me the information that I need to know. Okay, so as we can see with Ask Edgar, it gives a brief synopsis of the company. So it's right here, you get a description. Newton Golf Company, NWTG. Newton Golf is a technology-driven golf company, revolutionizing the sport with cutting-edge high-performance products. Okay, so basically it's a golf company with some technology. The company has barely any institutional ownership, like less than 1%. So I like to see no institutional ownership presence because that's like your competition in the stock. You know, like these institutions that like vouch for the company or just like, you know, they have algos. They're just like sophisticated competition. So to see no institutional ownership, very nice and clean. Also, golf is not going to like capture the imagination and have everyone go wild. So, you know, it's I like this kind of play. Okay, so on March 31st, NWTG, Newton Golf Company, announced that they were announcing earnings. They actually filed it a day later, which was the 1st. It was announced that whole move on the chart, that was based off of the earnings. And it wasn't that exciting because it really didn't do much. It didn't even go up 100%. That day, the whole market was generally slow, so I lowered some of my criteria for entry. But usually, it's I have a higher minimum to enter the stock, especially out in the morning. But the market was slow, and yeah, NWTG was one of the top runners that morning and the easy target of the day. And I like to do the summaries of the filings, as you can see right here. It shows you what you need to know in a nutshell. You know, you don't have to go through the whole thing. You can just skim it. So I like to click these little stars and just skim it. Also, it shows you the new. It's very helpful. And I like to go to the dilutions tab, and we can see their dilution. So green is in the money. Yellow, it's like, you know, red, yellow, green. Okay, another thing with Ask Edgar, I do like to see, this is the previous split history. It's very important. So you can see they recently split 30-1, 10-1. So contain errors. So yeah, you know, you got to double check everything. So nothing is perfect these days. Like, you know, the flow is a little off. So it's good to use a couple different sources. You always got to. And this is the market. Like everything is nothing is absolutely perfect, but Ask Edgar does a really good job, and you can double check with AI to make sure everything's cool. I also like to use Flash Research to quickly backtest and understand how likely it is for a stock like NWTG to either pump higher or go all the way down. Flash Research is a really helpful tool for traders who understand statistics. So this is Flash Research, and you can see it's pretty easy app to understand. Once you have an account, you go right here, open app. I like to first go to the stock I'm looking at, ticker analysis tool, go to NWTG. Okay, so NWTG, you know, no gaps historically. You know, I like to see where the company is at. It puts it right in front of you right here. It's really nice. this is I'm a fundamentals kind of guy. So like, I like to know what I'm dealing with. Wow, okay, so they got 18 employees over here. That looks like a real office. So sometimes you gotta check because, what do you call it? It could be a shed or it could be someone's house. It's not really an office. Anyway, so you get to also see their full-time employees, 18. That's not that many. I like to get a gauge of the company. Okay, like if it's like 3 or 4, that's a real red flag. This one's 18. Okay, now I know what I'm dealing with. So it's a very small company. Newton Golf Company, another description here. I like to see. So there's really no gap history on this one because it didn't do anything. The stock is dead, so. But I like to go to market sentiment. This is a nice little tool here. And you get to see recently the gappers. So this was the 31st that I traded it. So on the 31st right here, there was 3 gaps. So that's why it was a slow day. And the day prior was even slower. And then the next day, after a couple slow days, you get a hot day. 8 gappers. And these gappers are right here. The criteria is 20% to 500%. So it's just an overall feel of just gappers in general. And you get to see per month, which is the hot months. You can see this is the hot months right here, right? December 24th was a hot day right there. I remember before Christmas, that was real hot. I think it was a crazy day. So it's nice to know your stats. You see the overall, you can see the overall change from the open. Very nice and clean. And yeah, you got to know your stats, and definitely the ticker analysis tool is very nice also. Good stuff. How I set my key levels for scalping entries. Now that I've done my due diligence, the next step is to get on the chart and do some quick technical analysis. As a short seller, I have my own methods to identify key levels. Okay, so NWTG is a golfing company, and they have a lot of warrants. And as you can see here in the daily chart is just downward. It's just going downward. Very, very bearish chart overall. Company is no good. Look at this, and they've done reverse splits, 9,000. That's not 9,000. So it's just like, this is super bearish. They're doing nothing. These days in the bearish environment, we see a lot of these stocks called, I like to call them, bottom bouncers. So they're bouncing off the lows. So in a bearish market, you can still have a lot of stocks that squeeze higher just because they're just beaten down so much. And just like this one, NWTG, as you can see here on Thinkorswim, it has the bubble where it's like the year low, and we're just several days removed from the year lows. And as you can see, there's just it's just flopping around like a dead fish. And then on the 31st, in previous videos, the 5-minute candles are very helpful. And as you can see here, I made notes of the floats, very small float, and also these cashless warrants. So these cashless warrants, they're just very bearish. Some of the worst companies do cashless warrants. I go over the concept behind that in depth at the Friendly Bear University. It's just I explain it in further detail, but the bottom line is very bad companies do cashless warrants. They can just cash them out for $0. So that is pretty bearish, and that will increase the floats 3x. So 1.4 times 2 is 2.8. It's gonna more than double up the float, 3 times the float. It's gonna be once cashless warrants are exercised. And this stock, as you can see the history, it's on its way out the door. So if these people want to exercise those warrants, they're gonna need to do it soon with some kind of liquidity. And we had 65 million volume traded on the 31st. And as you can see, the past 2 years, they've done reverse splits. I don't know when they did the split, but as you can see, this is they have the liquidity right now, so to get those warrants out. Okay, so NWTG was actually going up on earnings. So it was on earnings in the pre-market. I don't like shorting earnings, but the fact that this had the warrants, the cashless warrants, and it was a beaten down stock, I was comfortable shorting it. And also it's a golfing company. So like golf is not a big deal. It's like biotechs or some weird, biotechs, like we've seen some of them do some really weird stuff. Could go thousands of percents up for no reason at all. So biotechs are very cautious. I like to approach them with a lot of caution. But NWTG is just a golfing company. So like, it's very easy to read. Let's double top off the pre-market highs. It was trying to break the pre-market highs, and I was prepared if it did. I would just size into it more because of the cashless warrants. Having the conviction of the cashless warrants was in all, just like from the history of the stock, it was pretty easy to read. So I would have been prepared to even add more and just like, I would have been comfortable in the trade and just risking the max stop, So in this case, it hit the rejection of the pre-market highs and failed, and tried to do it a few more times. So that tells me it's probably like a good till cancel order that someone has around here. Maybe the cashless warrants guy. He's creating that resistance, as you can see in power hour, try to squeeze, and as well as over here. And several days later, in hindsight, it's actually creeping back up. So it didn't fully die. So like the warrant holders, those cashless warrants, they might have not fully gotten them out yet. Although likely some were exercised here, some were exercised here, and maybe some over here. Because every time it hits a resistance, it gets rejected off that 250 level. So yeah, going with my levels also is that 250 level, and I'm looking at that pre-market high. It's respecting the pre-market high, and it's I'm not going to trade it power hour or the later in the day. The goal is to trade it here in the morning and just take the liquidity that provides, and also power hour. A lot of times stocks like to break out in the power hour. But look over here, the thesis was correct because it just keeps rejecting off that 250 level very nicely. If you're looking for more technical analysis techniques, I have a detailed price action trading tutorial that you can get for free. Comment price action and I'll send you a link to the tutorial. Now let me recap how I actually executed my trade idea for NWTG. You can follow my thought process behind the executions. But just for the people who like to doubt if the trade is real, you can see all the arrows on my DOS Trader screenshot. Each arrow represents an entry or exit. Also on DOS, I have my Cobra Trading Broker account number. If you're using a simulation account, your account number will start with the letters TR. Speaking of brokers, I use Cobra Trading as my day trading broker. I've tried other options, but Cobra has been the most reliable one with the best customer service. I personally visited their beautiful office located in Texas. They are regulated in the US and also SIPC insured. Cobra is inviting 3 Friendly Bear subscribers to visit the New York Stock Exchange. If you are the first 3 people to use my link to sign up in April, only limited to this April, you will get the tour to the NYSE during market hours with me. In terms of my experience using this broker, they have the best execution speed because of their advanced routing. I connected my Cobra account to DOS Trader Pro so that I can have direct market access. I usually choose Cobra's REB25 limit order routing to get rebates on my trading fees. If you're looking for a top-tier broker for short sellers and small-cap traders, I highly recommend Cobra Trading. Using the same broker as me doesn't guarantee your success, but I can only recommend the tools that I personally use. Now back to the tutorial. Reminder, I plan to scalp this setup, so I use a reduced position size so I can scale in and out of the trade easier. Okay, so now reviewing the chart and how I decided to start my entries. I want to point out once again, so like I was looking for that approach of the pre-market highs to start in. By the way, this drop in the pre-market, that's a pretty significant drop. So it went from $2.38 all the way down to 170. And then at the open, the volume came in and it went straight up to the pre-market highs in the sky. When it starts to approach the pre-market highs, and I know the float is small, so I'm looking for like a halt up. And I can't remember right now, because it's been a few days. I think it might have halted. I think that's probably the reason why I entered. But I can't remember right now. That's why it's important I'm doing this review, it's Friday. This happened on Monday. I think it halted. And if it halted, that was the ideal entry. But in general, what I'm looking for is that double top and a potential break of the pre-market highs. And I would have enough, leftover size to scale into it. So I'm not full size over here at all. So when you see my gains, I'm just taking the gains without being full size, and also I'm not taking the whole move because I'm being very defensive. And the reason why I'm being very defensive is because, look what the stock did. It didn't fully break down. So like when I'm not fully convicted, like for example, this stock wasn't up 100% or more on the day, and it didn't gap up that much. This was like a 50% gap. That's not ideal. So I'm not going to go full size, and I'm going to expect it to go further, because like how many times have we seen stocks go 100% up, 150, 200% up intraday? So I want to be able to ride that move. And that's why you'll see me just scalp this. You know, I'll take the flush and I'm done. I'm not waiting for the all-day fade, because I know, like, this can squeeze a lot more. Like, this can easily reclaim and then go to 100%, 150%, or more. We've seen outlier squeezes all the time in small caps. And, you know, I want to be able to, you know, get a piece of that move. I don't want to get stopped out. So I'm being very defensive, and I'm trading it very small around this areas, because it's not an ideal setup, you know, but it's very low risk. It's a C setup, but it's very low risk. Not much reward in there, but I'll take the flush. It's a nice cash flow trade. I'll take it like that. Nice cash flow trade. And yeah, with these easy cash flow trades that you scalp, it's very stress-free. You know, and it's like when you can make a couple grand just like that, you got to remind yourself, 2,000 a day, that's 500,000 a year. 1,000 a day, that's 250K a year. I know people will lose sight of that. Also, okay, so power hour, I wasn't really trying to trade it, but it spiked up and it kept hitting that area, and it was the same thing all over again. Wait for the entry at the top and don't go full size, because it might fully break out, and then I would need to hold off and decide to, you know, whether I'm going to add or not, or just stop adding altogether, because then I can reassess the stock. Is it going to squeeze? Is it going to squeeze in the after hours? Is it going to halt up? Like, what is going on? So when I took that short over here, and I'm taking bite-sized bullets, I'm talking about like 100 or a few hundred shares at a time, and I'm sprinkling them in there, and then as soon as I get the cover, I'm out. And at the same time, I'm respecting it, because, by the way, when it came up over here, I was like, okay, so they didn't fully dilute this thing. This was not the dilution. And over here, they didn't dilute it either, because if not, it wouldn't have spiked like that. So I was like, okay, so this thing could actually keep going. So this is, at the end of the day, that's a 70% move. It's not that much. You know, 100%, 150%, 200%, that's more ideal. And I would just wait if I would have, you know, and like scale into those. But this one, there was really not much range here, so I'm going really small size and just covering in the flush. Being proactive, very stress-free trade. It's all about sizing, and it's all about, you know, just waiting for your entries and scaling in, and then, you know, nailing and bailing is the name of the game in this one. It's scalping 101. My risk management strategy for scalping. Before I share my personal risk management, I want to share an important mindset. On a slower day, do not force yourself to trade. You can be much more happier and stress-free if you understand when the market is favorable to you and when it is simply just not good for your style of trading. Last month, the market was focusing heavily on the tariffs and the economic uncertainties. So on the small cap side, we also did not see many decent setups. Out of 21 trading days, I only traded 16 days. On the day when I traded NWTG, it was a Monday when the entire stock market was bouncing back after days of selling off. So it was a day with more volatility and volume, and this stock NWTG was fulfilling my set of criteria. That's how I decided to take risk on that day. My risk management always begins with how I select my stocks to trade. As I mentioned earlier in the tutorial, I dive deep into the fundamentals. That's how I differentiate myself from most traders who only trade the technical setups. If it's a Chinese stock, red flag for me. If it's a low float biotech, avoid. I have a set of stock selection rules to protect my trading account from risks that have been proven by history. I also set a max daily loss limit with my broker, Cobra Trading. This is how I ensure that I will never lose control and overtrade. For short scalping specifically, I'm cutting the trade as soon as I see rising volume with extended green candles. I don't overthink when I'm scalping because I know that I already have a reduced position size, which means that my losses are not going to be massive when I cut my losing trades. So all the trade preparation matters the most to my risk management strategy. My final tip is, if you're a newer trader, set a rule of 3 for yourself. If you hit your third loss of the day, no matter what your P&L is for the day, just stop trading. Even if you aren't red on the day yet, the 3 losses have a significant impact on your emotions. You will start thinking about how can I guarantee a win on the next trade, which is a dangerous mindset in trading. Because a trader should always be prepared to lose before entering a trade. If you find this scalping tutorial helpful, please subscribe to this channel for more realistic trading content. You can click here to watch my detailed stock selection criteria. I explained all my rules to avoid risky stocks.